morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, October 17th. On Friday, we had a reversal to the downside. We gapped up a little bit of movement from the pre-market and closed on its low. So dismal price action, very slow grind lower, if you will. Nothing really of good conviction saying, hey, we got some real strong sellers in here. However, we did close at the low, so the price action was not good at all. But most importantly, what I want to point out for today is going to be the dollar. The dollar continues to gain momentum. We are above our first swing high that I mentioned to you guys right here. Our next swing high is going to be 25.60, and if we get above there, we get a little bit of a backing and filling, if you will. I think we're going to catapult much higher to the upside. That will definitely put pressure on commodity sector and even equities. Another thing that I want you to pay attention to is, aside from equities, is and I don't have it here because we have a lot of charts. Pay attention to the rates. Rates are almost at our target at 1.85 off that ascending triangle from the summer. I do think that rates continue to move higher. Bonds continue to get weaker. Now, if bonds really start to sell off and really liquidate. Now, remember, there's a ton of investors, traders that are long bonds from way back when. And I think this is just the beginning. And if that happens, that's also going to put additional pressure on equity. So just keep that in mind, guys, for those of you who are the swing trader, longer-term traders, or even you're an investor and looking to continue to hold and buy. Be very careful. There seems to be a lot of headwinds out there, and I do suspect that this will eventually unfold, whether it be before or after the election. No one knows, but I think there's a lot. I see a lot of headwinds, at least going into Q4, which we are in, and of course the start of 2017. All right, now let's take a look at oil. This is a commitment of trader reports on crude oil right up in here. Now, as we all know, and I showed this to you many times, the producers, commercials, are the smart money, and the speculators are the hedge funds. They are the dumb money, okay? Money managers and stuff like that. And these small speculators also dumb money as well. You want to pay attention to is right up in here is the commercials. And I want to show you that they are the most shorted in a very long time, probably about a couple of years, crude oil, where the speculators are the most long and continue to add to their position. Now, crude oil is trading at $50.50 at the moment. Does it go higher? Yes, it is. This is not a timing tool, but I want you to be aware of when it does pop. The crude oil is popping on the November meeting that OPEC is going to cut 700,000 barrels a day, or at least up to. If that starts to disappear, I will say be very careful being long, because the markets you'll see crude at $40, $41 again. There's really no justification of crude being even up at 50, 55. There's so much supply out there and new oil coming online. So all I can say to you is be very careful. If you're swing trading it, day trading it, that's one story. That's fine. But just be very careful. I think I'd be a better short seller here. Even if it went up to 55, that's pretty much gonna cap everything. Here is crude oil daily chart. Just want to show you, guys. So we're up like 10, 12 days, 10 out of 12 days. Now we're into resistance here. So just be careful. A logical spot would be a pullback back to the 47 area, and then we would reevaluate it. But as of right now, I would not even think about looking to buy crude oil at these levels. Let's take a look at GDX. I do think that we are basing here. Here's the 50% retracement. I think we need to get way back down into the 1920 area. Once we get to 1920, then I'm going to be more interested in looking to buy the GDX, as well as gold. Gold here needs to come back into this area here. 115, like I mentioned last week, I think that's going to be the spot. I think you're going to get one more flush in gold, and then that should really solidify that move lower, and we should start to move higher, because I do believe that gold is in a second stage bull market. Here's a daily chart of spiders, and you can see here we had this pennant formation, and let me just kind of tighten that up a little bit more. We broke that pennant formation to the downside, and now we're looking to come back in again. 210, we got real close. If you remember, I was calling 210 right from here. We got very close, probably about $1.17. I think that's going to be your first target. That coincides nicely with the 200-day moving average. And then once we lose the 210, you're probably going to get back down to 202. and then of course 200, and that's going to be the areas to the downside where I'm looking for. 60-minute here, just want to show you 212.50 needs to break again. As you know, it broke on Thursday, and then we had the big move Friday, and then we kind of filled that gap. So 212 needs to get filled again, and then once we break 212, we'll get down to 210 in the spiders. IWM daily, same thing here. 119, 120 call, it needs to break. You can see we hit it here. We broke it above. We broke above here, and now we're back going into the zone area here. This support, which was resistance. We break 120. We're going to get to that 117, and that's the 200-day moving average, 117.03 in IWM. IYT just showing you here that we are above and we are basing, which is pretty bullish. And if anything, this does look like, and I wanted to draw this out for you guys, a nice little bull flag here. But again, it could break. If we break down, then all bets are off. And you can see the flagpole here, a nice bull flag. But if we break below this, then that's going to be negated. The transportation sector, the IYT bull flag. And last is going to be the Qs. You can see here we're basing up above. We just broke the 21 EMA, and now we're back down again. So this 50-day moving average, guys, is something I'm watching. 116.67. We take that out, we should flush right to the 38% retracement. Okay, that's what I'm looking for. I think the setup is going to be, the trade's going to be short the market, short bonds, and look to buy gold. That's going to be your market. And watch China too, because any further weakness in data and China really starts to take it on the chin, you can probably be looking to start shorting FXI. Have a great day. We'll see you tomorrow. Take care.